Section 4, Managing a Real Estate Office. Before opening a real estate office, a broker should prepare a business plan. The cost to open the company and the expenses for at least 6 months of operation are the minimum capital necessary to open the company's doors. Projecting income and expenses depends on the scope of the company's operations, its market area, economic conditions, and the number and productivity of its sales personnel. The broker should decide whether the firm will be part of a national franchise or whether it will remain independent. Also, the broker must decide whether to prepare tax returns on an accrual basis or a cash basis. When using the accrual basis, income is recognized when earned and expenses are booked in the period that it benefited. When using the cash basis, income is taxable in the year received and the expenses are deductible in the year that they're paid. Most brokers classify sales associates as independent contractors for tax purposes. Brokers do not pay employment taxes, nor do they withhold income taxes for independent contractors. Brokers may not control the activities of independent contractors. The broker must understand the IRS reporting requirements to avoid penalties. The broker must recruit sales associates continually. Sources include advertising, career nights, pre-licensing schools, other firms, and personal contacts. Whether hiring employees or independent contractors, the broker must be careful to follow all requirements of the Fair Employment Laws and the Americans with Disabilities Act. A broker's desk cost is calculated by dividing the total expenses by the number of sales associates. The company dollar is calculated by deducting commissions paid from the gross income. Determining the number of transactions required. The average company dollar per transaction is calculated by dividing the company dollar by the number of transactions. The number of transactions needed each month is calculated by dividing the monthly expenses plus profit by the average company dollar per transaction. Unlicensed personal assistants may not be paid commissions and must not perform selling activities. Licensed personal assistants may be paid for real estate selling activities, but only by the broker. The broker should develop a complete policy and procedures manual. Each sales associate should get a copy. It's important to develop a business plan. Lack of planning can affect the firm's success. The plan analyzes budgeting and controlling expenses and is essential if seeking outside financing. The broker must include plans for recruiting and training as well. Income and expenses will vary based on the scope of the company's operations, market conditions, whether it's a buyer or seller's market, the number of sales associates, and income sources. Two types of company expenses are fixed and variable. Fixed are, they're not in proportionate to the income. They don't vary. Variable increase and decrease based on the income. Some example of fixed expenses is occupancy, payroll, and insurance. Also, equipment and furniture rental, association and MLS fees, and business taxes. Variable expenses, MLS fees, utilities, supplies, printing, and technology. The benefits that being part of a franchise offers referral networks, formal training programs, national recognition, advertising assistance, management and sales training programs, and technology. Brokers can benefit by staying independent. They have lower overhead, increased operational freedom, local personality, and reduced startup fees to pay for a franchise. The two bookkeeping systems is cash basis and accrual basis. With a cash basis, that's the one used by most small businesses. Income is booked when received at closing, and expenses are booked when paid. Whereas with an accrual basis, income is booked when the contract is written. Expenses are booked for the period they benefit. So for example, a mail-out campaign this month may be charged to next month when the customers start buying. Other considerations and issues: your support staff and sales associate. Support staff, receptionist, bookkeeper, sales manager. What are you going to need? And the sales associate, the number. The number is going to relate to your budget. The broker must calculate the desk cost. Also, space considerations. If agents can't meet desk costs, the broker must decide whether to keep the associate. Should the broker hire a part-time associate? When should a sales manager be employed? So how do you calculate desk cost? You take the total expenses and you divide it by the number of associates. There's an example here. If a company's total expenses are $100,000 and there's 7 sales associates, each associate must generate $14,286 in company dollars for the company to break even, and that's just simply taking $100,000 and dividing it by 7. Calculating the average company dollar per transaction, you take the company dollar divided by the number of transactions, and they give you this example. $150,000 divided by 40 means each transaction nets around $3,750. Determining the number of transactions that's required per month, you're going to need the amount for expenses. What are your expenses? Plus your profit. What do you want to make? Take the average company dollar, and here's how you do it. The amount needed for expenses plus profit divided by the average company dollar is 17 transactions per month. It is imperative that the broker know how many associates are going to be needed. Some brokers want many associates and are willing to accept lower standards, while other brokers are content with smaller staffs of highly trained professionals. The number of sales associates must be manageable. In reviewing application requirements, you have the Equal Employment Opportunity Laws, which prohibit discrimination based on race, color, religion, sex, age, national origin, marital and family status, or disability. The American with Disabilities Act states that there must be made accommodations, may not fire or refuse to hire people with disabilities or persons associated with. You may not ask if a person has a disability, and you cannot require a medical exam before offering a job. The process of application is starting out with the form. You verify the license status. You interview. Many brokers prefer a 2-interview process, and then of course you follow up on references. When hiring independent contractors, a broker saves by not paying payroll taxes or benefits to the sales associates. 3 major requirements. Independent contractor must hold a real estate license. Gross income must be based on production, not hours worked. And there must be a written contract showing the sales associate is not an employee. When it comes to an independent contractor, the broker cannot control behavior. For example, the broker can't tell the independent contractor when and where to work. and they do not have financial control, which means the broker being able to reimburse the independent contractor for expenses, paying a salary, or paying for insurance. Employment arrangements and agreements include reporting payments to employees and independent contractors, non-compete clauses, hours and working conditions, and written understanding and acceptance of company policy. Licensees' compensation plans, straight salary, 100% commission, fixed percentage commission split, commission with bonus, and graduated commissions. Items that typically reduce a commission are fees and payments, franchise fees, and sign fees. Training sales associates include company policies and procedures, best for an orientation course for new agents. Technical skills, time management, goal setting, and filling forms. Listing skills, prospecting, listing presentations, pricing the property. Selling skills, qualifying buyers, showing properties, and closing contracts. And the technology skills. There is a lot of tools available in tech these days. Chapter 475 requires brokers to supervise agents. It's very important to have a policy and procedure manuals which will help prevent misunderstandings. And it should clearly state the prohibition of unlawful discrimination, sexual harassment, price fixing, license law violations, and resolution procedures for any and all disputes. Duties of a sales manager would include monitoring production, both company and individual associates, ensuring compliance with policies and procedure, laws, and ethics, supervising advertising, and scheduling floor duty for volunteers. This is the conclusion for day 1.